Hello, and welcome to the 43rd Trading Opportunities webinar, guys. This is Nirav, and we'll just wait a few seconds so that everybody who will be attending live can join in the chat. And let me check the audio and everything at my end here. It looks like there is a delay on YouTube. Let me see. By the way, if you guys are able to hear me properly and see the screen share, kindly do let me know by typing in something in the comment section. And also, how are you guys doing on this fine day? Yes, so audio is working fine. Hello, Steve. Thank you for the message there. Charlie, how are you? Fraser, Steve, how are you guys doing? Loud and clear. Thanks, Charlie. Hey, Clever, I'm good. Didn't see you in the last two webinars, maybe three even. Hopefully, you are doing well. I'm doing good, by the way. So, I think we have the audience and everything is working. So, not much point waiting here. Hello, Antoine. Nice to hear from you again. So let's just start off with the very quick disclaimer here on screen, suggesting that all content presented here will be for educational purposes. I am not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purposes, you yourselves will be liable for your profit, loss, or loss of profit. Right? Rest of the disclaimer content you can simply read on screen. With that, I would say we are done with the legalities here. And before we proceed further, let me just show you a very quick stuff about my work. Right, I know you guys are joining in the webinar regularly, but this is for the new audience basically, and that's why I'll just wrap it up very quickly. So first of all, my name is Nirav. I'm the admin and owner of the website 50eyes.com and the YouTube channel with the name 50 Eyes Market Analysis. And using these resources online, that is my website, channel, and other stuff, that is other distribution channels which I use, I have been producing my views on various different markets, including stocks, Forex, commodities, indices, cryptos for the last 7+ years, let's say 8 years, roughly speaking. And currently we are doing this webinar series called Trading Opportunities Webinars, where I come in live during market hours every Monday, Wednesday, and Friday at 2 p.m. GMT, and I talk about different markets, right? Apart from this webinar, other content that I have for your help regarding trading is my book, Think with the Markets, Secrets to Achieve 80% plus accuracy using Elliott Wave. It's available on Amazon's Kindle platform, right? And lastly, before we proceed, I am not going to give a very big introduction, just very quickly. Uh, Generally, in this industry, even a 60% accuracy is considered very good and high. And I have 6+ years track record of 80% consecutively, right? You can check everything. The way we have is the date, the instrument discussed, the analysis, and the video links, etc., and what worked or what did not work, very transparently presented here. And for 2021, we had 82.22. 2020 was 88.52. As you can see, you can again scroll down and check all these links and everything. Right, 2019 was 84.88, 2018 84.61, 2017 87.5, and 2016 83.34. You can check it by going to 50eyes.com/forecast accuracy. Right, with that, our introduction is now complete, and the way we will proceed with the webinar is that we will discuss the instruments Euro USD, EURCAD, USDJPY, EURJPY, crude, gold, S&P, Nifty, and then at the end Bitcoin. You can post your comments in the comment section, and I'll have a look at them once I'm finished discussing one chart. So that's the way we will proceed. So far, we have 46 trades, big moves, which we have caught, right, in the last 41 webinars, and we will see what happened with the last discussion. So without any further ado, let's start our discussions. First of all, on screen, guys, you have the chart of Euro USD, which I currently do have short positions, right? And that is something which we had discussed during our last webinar. And the reasoning for that, let's just quickly see, was this. First of all, we were thinking that this market was going down for a first leg down, correction up, and then another leg down, right? And what we have here is possible zigzag or a possible impulse down. So if it's an impulse down, then this will be a 1, 2, and 3, 4 up, and then 5 down, right? But if it's a zigzag, then the situation will end with this leg down followed by this leg down. So with this second leg down, the situation should be considered complete, right? So now here we have the first leg down and the second leg down. So the minimum qualification for the downward movement is already complete. Secondly, we also seem to be having a break of the channel line here, right? So I'm not considering it as a very serious break because currently we do not have a close above the channel line. And as you have already seen here, there was also another false break, right? So that's why I'm not currently exiting my shorts, even though the positions are running in losses. I already have a stop loss placed, but I wouldn't hesitate closing it out manually before the stop loss if I feel like this position is not gonna work out. So further points that I would like to add is, if it's not going to work out, then we will consider this as A down, B up, and C down, right? Second thing we will consider is, let's say if it establishes itself above this price level or zone, let's say around 1.06151. So above this level, keep in mind the data feed is this one. You may have a different data feed and the results or the price levels may vary. So above this level, if the market establishes itself, then I do not think we will have much of a reason to stay in the short position, because at that point it is more likely going to complete the structure as a zigzag and then head higher, right? So now currently running shorts, I just discussed, we have discussed the invalidation level, and actually there is nothing much to add here. So if you have any doubts, please do let me know, guys, in the comment section, or just type in understood, clear, something before we move to the next chart. EURCAD. Still waiting. I think there is a audio delay here. So yeah, please do let me know in the comments, and I'll just head over now. Thank you, Clever, for the confirmation. Let's now head over and discuss the chart of Euro Canadian dollar, EURCAD. Thank you, Fraser and Steve and Charles. So EURCAD is forming a good setup or setup worth keeping in your watch list. Now, why do I say it? Because last time when we discussed, we were of the view that this market might be forming a leading diagonal. Right? So if this market is forming a leading diagonal, one second, then after the leading diagonal is complete, this market should give a corrective leg down. And once this correction is complete, then the market should go up. For those of you not much familiar with the concepts in Elliott Wave, let me just clarify. A leading diagonal is basically, in price action terminology, a wedge pattern. So a wedge pattern is basically something that actually generally people use for it, use the wedge pattern for converging things. So I'll just avoid price action terminologies here anyways. So yeah, getting back to our discussion, leading diagonal is something like this. So there are 5 legs in it. This is the first leg up. This is the second leg down. This is the third leg up. The fourth leg down. And this is the last leg up. And the fourth and the first have a price overlap, as you can see. So similarly, we have the leading diagonal here. Once it's complete, we should see some sort of correction, could be flat, zigzag, whatever. So it is currently seemingly inside that correction, right? So what I'll do is place an alert again near the low. So once it crosses that expected price level, so because this is the expected zone where we think the market will complete the correction. So it has already dropped into the zone, but most likely or generally it even goes till the lower level, not always. So if it does go to the lower level, I would like to be aware of that, and that's why there's an alert. And for those of you wondering, this is the price level between 1.4317 and 1.4342, right? So this is the level in which we expect this market might reverse, right? Once this market, expecting that discount is correct, once this market reverses, then either if we are able to catch it at the reversal point, well, good enough, we can add partial longs. But most importantly, we can add longs near the high, and conservative traders can wait for the break of the high as well. But keep in mind, the more you wait for confirmation, the lesser the profits will become. So that's something to keep in mind. I personally have placed 2 alerts, so I might enter partial longs here and then here. Or if I'm able to catch the low, well, then I'll add some over there as well. So that's about it for our discussion of EURCAD, guys. Pretty clear setup. Definitely keep it in your watch list, right? Nothing much to add here other than this. And for those of you joining it for the first time, we expect that this market, if the count is correct, can take out this high as well, which is the level of, roughly speaking, 1.46438. So with that, let's just now head over to USDJPY. If you have any doubts, please do type in the comment section. Otherwise, let me know by typing in understood clear or something. And definitely keep this one in the watch list. Might give us some good trades. So USDJPY pretty much doing things as expected. Thank you, Fraser and Steve, for the confirmations. So now, as I was saying, USDJPY is seemingly doing everything as we expected it to do in the last, or as we discussed in the last webinar, right? So it is still possibly forming the wave C up. Let me just tell you quickly what we are doing here. So we are expecting that this is a possible count. This is the point of reference around the price level of 127.20. From this point, we have possibly a WF, X down, and then a Y up. Within this WXY, last time when we discussed, we were saying that this is the A up, B down, and we were expecting another leg up for C, right? That is also visible here if you look at the actual counts, right? And our idea was that if this market by any chance goes below this green channel line, then we will be interested in shorts, right? Do not pay much attention to these lines, this one and this one, because we may have to change the counts, or something else might come up which may require us to readjust. The only clear setup which I have on screen right now is the break of the green channel, right? So since there is no break yet, two things are possible: either this C is still continuing, or that this count is completely incorrect. If still C is still continuing, then this setup is still valid. We will still wait for the same break of the channel, and if this count is incorrect, then we will see something else, and that would be the break of the channel to the upside instead of the downside. So invalidation, long story short, the invalidation comes at the break of the channel to the upside, right? And entry and trade not confirmation, entry for the shorts, I'm personally only gonna take them if this breaks below the trend line. So that's about it for USDJPY, and I'm finding this a little bit unclear. So I'm less, what do you call, not keeping it at the top of my mind for trade ideas. So that's just that for USDJPY. Hopefully it was clear. If not, you can always push the comments in the comment section, right? While I load the chart of Euro. Which seemingly is doing things as we expected. Thank you, Steve, for the confirmation. What about the other participants and those of you who are online on different platforms where this stream is being restreamed other than YouTube. I mean, basically, you can also use the comment section. So guys, let's now head on with our discussion of EURJPY. Thank you, Fraser and Charles. So first of all, what we have here is a possibility of C continuing for wave 2 or B up, right? It is still a valid count. And what is still a valid count? If you are not in what you call attending these webinars regularly, then what we have thus far is a possible diagonal down, right? Or you can also call it a wedge pattern. And then we are expecting an A up, B down, and C up kind of movement, right? So what basically is this whole structure is a leg down followed by 3 waves up, like this, down first and then up, like A up, B down, and C up. That's what we are expecting on this counter. So as I said, the leg down is already complete, and we are now expecting possibility of the C, right? Now in the C, it looks like we may have had a diagonal, right? But the market then afterwards still continued the upward movement, which is suggesting that the C is still continuing to the upside. Now we may have to revise the whole count from this point of reference, which is the price level of 139.553. But right now we are not much interested in it. Right now the whole idea is very simple. The idea is that if the C is still continuing, which looks to be the case, then it should at least take this high once, and then there should be a correction, and then it should take out the last high again, this one. So first it will take out this high, and then it will take out this high to the upside. So basically 2 upward movements, if this count is correct, should be seen on this counter, right? How will they come? It may come like a diagonal, it may come like a impulse. Both possibilities are still valid, but the point to note is that it still has not cleared the last high. So in my personal opinion, pullbacks at this point will give us buying opportunities. So again, EURJPY is something to be kept on the watch list here. What I'll do is I'll readjust one of the past alerts because it's sort of not that relevant right now. Okay, so yeah, as I was saying, pullbacks, if any, will be considered, in my understanding, as a buying opportunity, right? Other than that, what is the upside movement? What are the upside targets? I'm not very interested in discussing targets because if it's a diagonal formation, then the upward movement will not be very huge. So this should be taken as more of a short-term trade, maybe intraday even, instead of a swing. Targets are generally more applicable or useful in swing trades, in my personal opinion. So what that means is that even if it goes this much up, we can consider this as a completed trade, because 1, 2, and let's just say it does something like this. This could be considered as 3, and then it can go down again for 4 and can go up again for 5. So as I was saying, maybe there won't be much of an upside movement if it's a diagonal. So keep that in mind and keep this on the watch list. It should soon give us some good trading opportunities. So that's about it for the chart of EURJPY, only for short-term intraday trades and setups, and the way to proceed I have already discussed. But if you have any specific questions still, please do mention in the comment section, or just type in clear or understood something. And in the meantime, let me see the next chart, which will be the chart of CL. Thank you, Jill, for the confirmation there, and Fraser. Okay, so now let's head over to WTI, or West Texas Intermediates crude oil. If you are attending the webinars regularly, then you are already aware that 1 second, let me just, yeah. So as I was saying, if you are already attending the webinars regularly, then you must already be aware that this counter has remained very unclear, sideways, and non-tradable in my understanding. Of course, you can trade intraday, but From a short term to swing perspective, it was a little bit unclear. We have two main scenarios running here. From this point of reference around the price level of 76.63, we think that there might be an A, B, C, D, E, a possible triangle, right? Once the triangle is complete, we can see a movement in the downward direction. That's one of the two possibilities. And to take benefit or to trade this possibility, we have placed alerts near the low, which is basically the price level of 73,447 or 73.50, let's say, for the sake of convenience. Keep in mind the data feeds you use are important. This current data feed is coming from this particular provider. So your prices may vary a little bit if you are using CFD feeds. Now, as I was saying, downside, we have a clear setup. If the market does break lower, then it should go lower than 69. Actually, let's just say 70 for the sake of convenience. So if it breaks this low of 73.50-ish level, then we expect that it will go lower than 70, right? And much lower. Targets, as I said, we will discuss it at that point in time, because currently even below 70 is itself very appealing. Or let's just discuss the second scenario. Second scenario is suggesting that the whole correction which was incoming from this level of whatever this is, around 130-ish level, 131-ish level, is already complete here, in which case we should not see a break below 70 at all, and the confirmation for more upside will only be there once this market takes out the high or the one of the recent high around 80.21. So if the market breaks the higher level or upside level of 80.21, then I would say that we will be interested in some long trading opportunities. Otherwise, we are not interested in taking any longs on this counter, right? And yeah, it's still a wait and watch. I think for the last two webinars, it has been a wait and watch. So if there are anything, specific level or something you want to discuss, do let me know. Otherwise, we can just head over to gold. Sometimes saying I confirm crude was tricky, unpredictable, sideways correction, usually better to trade instruments. For instance, yeah, exactly. We have so many instruments. So if crude is tricky, why bother with it for the time being? We can just leave it alone. That's the way I preferred things as well. So any other comments on the counter, guys? Steve's saying oil clear. So thank you, Steve, for the confirmation. Let's now head over to the next chart, which is gold. Thank you, Clever and Charles. So gold, we are still in the short trade, and the short trade was, by the way, taken in front of you guys in the last webinar, if you recall, right? Let's just discuss the whole reasoning and why we are still in the shorts and everything else. So first of all, the short trade, let me first of all note down the time. So yeah, as I was saying, first of all, the time for gold is, or the last discussion for gold is that we have a possible impulse in the downward direction. Okay, so if we have a possible impulse in the downward direction, then that means we are currently in a nested 1-to-1 formation, maybe, if this count is correct, of course. So this is our point of reference around 1959 or 1960, let's say, roughly speaking. So from this point of reference, our count seems to suggest that this is a wave 1 down, 2 up, right? And this is another wave 1. So what by nested, what I mean is that there is a series of ones and twos, and what do you call, we are waiting for the third of the third. So that will possibly be the strongest move, generally is, not always. So what we have is the 1 here, 2 here, and the third is incoming. And as we know by the fractal nature of Elliott Wave, that if there is an impulse like this, then the 1, 3, and 5 will have 5 waves inside of them. So 2 is complete. So this 3, as per fractal nature, should have 5 waves inside of it. So it should look something like this again, right? So in this particular case, we think that maybe this is the first of the third, this is the second of the third, maybe. or maybe the second of the third is still continuing. Both possibilities exist. I personally think the second of the third might still be continuing if this count is the correct count, right? Which basically means the upside movement is a corrective structure. Let me show you more properly or more clearly here. So what I mean is that this could be a possible running flat. So in that case, the wave one down will be followed by a structure like this, which I have drawn here just now, and we can call it the two. So that's why I'm saying that once this two is complete, we expect a new downward movement, right? So with that understanding, I have still kept my short positions here on. Let me readjust the alert here. Yeah. And I personally will not like to hold it if this market goes higher than 1845-ish level. So basically the recent high. So if it goes higher than that, then I will not be much interested in holding this long position. Okay. So pretty much explains overview. And by the way, if this count is correct, then the downward movement can be substantially big. Can be. Again, keep in mind counts are dynamic just like the markets. So if it's big, then of course here's a trade we would like to hold on till the end, basically till it gets invalidated or it's a target. That's about it for gold. And guys, again, as I've requested in the past webinars as well, you need to engage a little bit more, hit the like buttons and share the content, because we want to achieve more views and reach new people. And that would only be possible if you guys are sharing the content regularly with at least 2 3 people or 2 3 groups, whatever is possible from your end, right? Currently we still are not crossing 400 views per live stream, and as you already know, this takes a lot of effort to come up with this research, and sharing it like that again requires my time during live market hours. I'm a trader also myself, as you already know, so I would appreciate any, what do you call, participation or help from you guys, basically, right? So here's the comments. Steve is saying clear on gold. Fraser is clear, clever, all good. Charles, just like thanks. Thank you everybody for the confirmations and your support. Now let's head over to S&P's 500. By the way, guys, is it possible that you guys let me know which countries are you joining the live streams from? I'm just a bit curious to know. I know many of them are of you guys are from US and it's early morning, so some of you even join late. But anyways, let me know in the comments while I load up the chart of S&P's 500 on screen. Charles is from South Africa. Steve, UK. Fraser is from UK. Okay. And what equipment are you guys using to view the webinar? Are you on your tablet or computer or phone? Jill, San Francisco, California. Clever is Channel Islands. Where are Channel Islands located, Clever? Anton is from Europe. Yeah, as I was saying, iPhone, Jill's from iPhone, Steve on computer, PC, Fraser, Charles computer. Okay, good. Tone is from computer generally. That's what I like to hear. Bigger screen, clearer understanding of everything. And of course, you can also trade side by side if you require to, or if you come across a good opportunity. Clever saying between France and UK streaming on PC again. So almost the major part of this live stream attendees are on computer. Well, that's definitely good to know. Okay, now guys, let's now head over to our discussion of S&P's 500. S&P's 500 is 345. If this count is correct, still having some downside remaining. Okay. Now it is pretty much clear with the count, but for the audience who are sort of new here, I'll just quickly explain what is the structure and what we are thinking. So first of all, from this point of reference, which is the price level around 4196, We are expecting a leading diagonal in the downward direction and then a correction in the upward direction. Correction is A up, B down, and C up. For wave 1 down, wave 2 up, right? And then we have another 1 down, 2 up. So basically, we are heading down in an impulse. To be more clear, what I'm saying is something like this is happening, right? And within this stage, we still have not finished this leg, right? To finish this leg, we still need to cover some downside. Let's say this last part is remaining. So this last part is actually the wave 5, which is represented by this double bracketed 5. So if we magnify this circle 3, we will find that this is what we are looking at, right? Now if we compare it, we have the double bracket 1 over here, 2 over here, and 3 is over here. So 4 is either complete or still continuing, but more long story short, once it's complete, we expect this market to go lower, and it should basically take out the last low, which is around the price level of 3942, and should go below 3942, and immediate target will be 3928, and then lower levels are also possible. Now generally wave force can take time, and that's why it may propagate sideways within this range for some time, right? So that's why it's a swing short, and intraday shorting opportunities, I believe, will also become visible on this counter not soon afterwards, because after all, if this is a wave 4 and will go sideways for quite some time, then quite some time means we will have some more clearer setups in the time to come. So S&P is a definite what we would call a add to your watch list kind of instrument. And the only time we will be saying that this analysis is probably not working and we need to change or completely find a new one would be if this market goes above the wave 4 high around, roughly speaking, 4025 levels. So above 4025 levels, we will say that we are not interested in this short scenario, and we will update the counts or do things accordingly. Hello, Amzad on TradingView. I'm doing well. How are you? So yeah, I think S&P we have discussed in quite some detail. I'll now see if you guys have any doubts or comments. Anton is saying nice and clear Elliott Wave counts about S&P. Awesome structure you found. See how Wave 4 works this week. Thank you, Anton, for the comment. And yes, this week we'll just wait and watch and look to trade this Wave 4. By the way, do note that we are currently on the 4H chart, and I think once this chart becomes a little bit more clear, you yourselves can dive in on some smaller time frame and find a short-term trading opportunity, and even intraday trades are possible here. So observe it closely. Thank you, Jill, for the confirmation, and Steve and Fraser and Charles. So let's head over to our analysis of Nifty, and then we will head over to our last analysis of BTC. So let me quickly load the charts on screen. Okay, so this is the chart of Nifty 50. Let's see how this thing is working out. So first of all, if you guys recall, in the last webinar that we did, I very clearly mentioned one thing, and that one thing was that I personally think that this market should at least take out the most recent low. Let's just head over quickly to the daily so that I can show with some more clarity. So what I was saying in the last webinar was that it should take out this low, which is the price level of 17,348. That was my personal bias, right? So that has already been done. So if you were able to catch this opportunity, well, good for you, because this session actually gave a very good trading opportunities in that direction in the opening of the session itself, right? And as I said very clearly, there were two possibilities. First, that it will just go and take the low, right? And then it will proceed to the upside. Second possibility was that this is a nested 1 2 1 2. You get the point. A series of ones and twos, and this is a 3 of a 3 of a 3 of some degree. So it will give a very sharp and fast fall, right? Now see, fast and sharp fall is not always going to be clear. Maybe it will open gap down in next session, right? Again, that's a strong possibility still. If it opens gap down, then we can say yes, this 3 count is working out, because generally gap down movements are the characteristic traits of a wave third. Generally, a bigger gap is seen in the third of the third. So, which is what we expect. We are expecting that this market is a series of ones and twos, right? So, if this is a series of ones and twos, then the third of the third is soon going to be in play. And if that is going to be the case, then a gap down is not a very wild expectation. That's something to be, what do you call, thought of right now or planned accordingly. So that is a possibility, right? And the other possibility is that this two is still continuing sideways, in which case it may even become a flat. So it may continue like A up, B down, and C up. If that is the case, then we will see some upward movement before the actual fall comes into play of the third wave, right? So at this point in time, since our most minimum target or the lowest target has been achieved, multiple possibilities have opened up. So it will be better if we just wait for this session or the upcoming session and see how it does. But personally speaking, I think the bearish side is still not over yet, and the bearish bias cannot be considered as completely relegated just yet. So for bearish bias, just summarizing everything, keep in mind dot one, dot two, straight down is possible, or dot two up and then down is possible. So up and then down, or straight down, both things are possible, right? And the other possibility, if this whole thing is which started from here is complete already over here, then it will go straight up. But as I said, we do not have any confirmation for straight up movement yet, so that's why we will not consider this as the main count just yet. And also with this outcome of Nifty going down and achieving our minimum target, we have now 47 trades that worked out in the last 42 webinars. I think that is quite a good number. How awesome is that? What do you guys think? And also, what do you guys think of the Nifty analysis? Do you have any more doubts or questions after this discussion? If so, please let me know. Otherwise, we will head over to our last chart, which will be the chart of Bitcoin. Thank you, Fraser. And Jill is saying, awesome record. Thanks. Thank you very much, Jill. Clever. Thanks. Great, Nirav. Steve is saying clear. Okay, guys. So let's now head over to next chart. Charles is saying EURCAD is busy moving as you discussed. Let me see. I had some alerts placed, or did I miss something? One quick second before we head over to our last. Yeah, so I already have an alert somewhere here. So if it goes above it, I will become interested. So now let's head over to our last chart for the session, which will be the chart of BTC. So BTC, so far it has not done anything out of the unexpected, or let's say extraordinary. First things first, here on the counter of BTC, we have the first leg up and the second leg down, and then one up, two down, three up, four down, and five up. Basically, it's an impulse. And if you are attending the past webinars, you already know we have caught this leg. We caught it till the very end. You can see this white box. This was our target region. So this trade was initiated somewhere here, around roughly speaking 17,600. We will have to check the exact levels because I do not recall the exact levels. But somewhere here, roughly speaking, we were able to predict the movement already, and the targets were also picture perfect. Now afterwards, what we have is a continuation of the impulse, because again we were able to re-enter longs near the low, which is the level of around 21,500-ish level, something 550-ish level. Now since then, this market has not given any clear sign of weakness. So the strategy generally in these kind of situations is, if we have got a good entry, we just trail the positions and trail it if either the stop loss hits or if the market moves a extremely big movement. So in this particular case, if the market goes to the red channel line, then that could be considered as a possible target achievement, because the red channel line, or the upper part of the red channel line, is the expected target level or resistance level, right? So around there we can either book profits, or simply just keep trailing. Secondly, we have already predicted this box support region. It was coming around the price levels of 23,360 and 22,880. So between these levels, we were expecting that this market will take support and then head higher. So as you can see, it is already taking support between these levels. So maybe it can just fly high from here, right? And also you can move your trails a little bit below this level or at the low as well, which is currently coming around 22,794 something. So BTC, that is exactly performing as expected. Just keep trailing, nothing new to add here. And with this discussion, I would say that our webinar for today is complete. And again, I would like to request you guys to share the content. If you are on Twitter, make sure you follow me and retweet or like or whatever on Twitter as well, so that we get more reach. We are already at the 43rd webinar, and I'll continue, and I'm hoping that around 50th webinar, we will take a look at where we are and decide further path or plan of action. So please do your part and share my content as much as possible. Let me know, guys, if there's anything you would like to ask here before I close this discussion. Jill is saying great, thanks. You are very welcome, Jill. Okay, so it looks like everybody understood whatever we discussed, and let's see you guys in the next discussion. Fraser is saying many thanks. You are very welcome, Fraser, and Steve and Charles. And Toyin saying, what is your invalidation level for bullish scenario on BTC? Upward and impulsive wave in blue levels. Upward and impulsive wave in blue labels. Oh, this one. Okay, so this is a 1-2. So classically, we generally would say that below the start of wave 1, but that is, of course, something we are not really interested in. And generally, you can just take this red channel, close below red channel, or establishment of price action below this red channel as your invalidation. In this particular case, technically it's still not valid because this whole thing is sideways. It could be counted as a bigger corrective structure 4 or 2 of some degree, right? But if you are really conservative and want to trade with the smaller risk, then yes, the break of this red channel line and establishment of price below it can be considered as the invalidation for this count of this CN, or 1, 2, 3, 4, 5 last impulse. Hopefully this clarifies your doubt, Antoine, and I'll just wait. If you have any further doubts, you can just ask again. If not, I'll just close the webinar. So with that, let's just close the webinar, and thank you guys for joining in. I'll see you on Wednesday.